Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just hit midday here, which makes it 1100 UTC. Big shout out to everybody joining the stream live today and for everybody that's watching this here on recording. So we got a lot to cover today on Bitcoin. So I want to discuss weekly levels. Quite a few people have been asking me how I'm playing range highs, range lows on a weekly basis. So like last week's high, last week's low, which makes the foundation of a lot of the trades that I take, and breaking that down then onto a daily scale as well, and how we look at patterns such as our inside bar, which we talked about a little bit last week. So we're going to take a look at that. We're going to take a look at our levels, how we can get confluence from oscillators like the RSI, and also key early indicators from divergences, and also looking at the B Pro and how I use that, along with bringing in the weekly open and Monday's range. So we're going to keep this short and punchy, and we've got a lot to crack through. So before we get on with that, let's have a quick word with our sponsors, and then we will crack on.
PrimeXBT is the most powerful trading platform, offering immediate access to over 30 assets. Trade cryptocurrencies, Forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXBT in minutes.
Hey everyone, how we doing? Thank you very much for joining the stream today, whether you're live or if you're watching it on catch up. So got a lot to go through today, so I want to just crack straight on. I've got a clean weekly chart here. Now, I like to start with a clean chart or a naked chart. It helps you kind of go through things from a higher time frame perspective and down, which I find is a mistake that a lot of people make when they get into trading. They get obsessed with an hourly time frame, a 15-minute time frame, etc. You forget to kind of take in the big picture and take a look at things as they're going. And this is obviously where we build our initial bias, right? And we can see we're still in this strong downtrend, all right? But we can see that price has come up from here, forming a bottom, local bottom. Maybe it's the overall bottom. Personally, I don't think it is. And the reason for that is more to do with the macroeconomic environment that we're facing at the moment. But we've had a nice bounce from global markets. Equities have been up. S&P's up something like 15, 16, 17% since the big drop in June. So where are we and what are we looking at? So I want to focus today by looking at our higher time frame levels and how we contain them into levels that we want to trade. So for that, I'm going to zoom right into the chart here, and we're going to take a look at our weekly levels. So weekly levels for me are really, really key, and I mark them up as last week's high, last week's low. Now, the reason we're looking for these is because the price action that's contained in one of these weeks, very often what you'll notice here is that when we get the highs, and let's use this candle as an example, we can see that when those highs get swept, price comes back down within the range, and it very often tests the far side of the range, okay? So we can see a number of these examples as we go, the most recent of which being this one over here. Okay, price came up in this week, took out the stops above here, bit of a liquidity run, came back, closed inside, and then went and came to the far side of this range. Now, what we're asking ourselves here is, are we seeing the same thing here? So, as we can see here, price has come up, run the liquidity above here, closed back within, and is now starting to trade down. So, let me just clean this up a second. And let's just take a look at this current week that we've got here. All right, like we said, we've run the highs here, we've come back in. So we want to then decant this down onto the lower time frames, right? And if we take a look at the daily, okay, and actually one thing we can do while we're back on the weekly is let's put our low in as well, because this is our initial target. The other thing we want to be aware of here, guys, is that this candle that precedes this one here makes this an inside bar pattern. And when we have an inside bar like this, quite often what you'll see is the price will get run on one side of the range and then it will travel to the other side of the range. So that's something that's worth being aware of also. So when we're looking at this on the lower time frames, we've got an idea and we've got targets in mind, right? So if we run these highs, we come back within, then we're expecting to target here. If we break down underneath here and we hold and we start to break down further, then we look to targets down here for the mother bar low. Okay, so that's the mother bar, is the larger of the two candles. This is the inside bar. Both are treated the same as ranges. We wait for price to get to one of the extremities, the mother bar high, inside bar high, or the inside bar low or mother bar low. We're looking for deviations or fake outs for price to come back within that range, and then we take the high probability trade to the far side of the range. So popping this onto a daily scale, something that I like to bring in here when we're looking at it, I like to just use mainly price action, okay? But I do like to bring in the RSI here, which we can see at the moment is actually pretty flat. It's above the 50 line, which is a bullish sign. We haven't got any notable divergences, all right? But for that, to make sure, we want to pop on our B Pro. We can see here from B Pro how it caught the divergences on these corrections perfectly. And very often when we see a divergence come up, then what you're looking at is you're looking at a correction in an ongoing trend until it catches that perfect point for the reversal. Same as this one, look, the corrective move in an ongoing downtrend, all right? So we've not got anything there on the daily scale, which is fine. So we can close that down, and the RSI is not telling us too much either. So here, though, what we can see is, as we discussed here within the inside bar pattern, price ran the high, come back down, back in the range, and now we're targeting the range lows. If we lose the range lows here, the inside bar low, then we're looking towards the bottom of the mother bar. Okay, so nice, easy way for us to pick out levels that we can see, because we're waiting for price to interact with those levels, right? We're not just blindly placing limit orders there. So if I tidy this up, because I believe I've got this written up already, we can pull that back in just to show you it here on a daily scale. Here was the previous high that got run. So as we can see here, we're not just placing a limit order here, we're waiting for price to come up, interact with our level, and then we're looking to execute this on a lower time frame. All right. So before I go down to the execution time frame, two more time frames I like to check. I like to check the 4 hour. So when price is coming back up here, we're already aware, we're saying to ourselves, right, this is where we're looking to take a trade. All right. Hang on a second. There we go. And then the other thing again is bringing in the RSI. So for me, I like to see the RSI here up in overbought. Yeah. If we're up here in overbought and we're looking for shorts, that's a nice bit of confluence. If we're down here in oversold and looking for longs, that's another nice bit of confluence. Okay. So we've got that here. We've got a little tick in the box up here to say, okay, well, the probability may be to the downside here. And then we can check that on our hourly chart as well. Okay, and now when we're on the hourly chart, we can see that actually we had this huge peak over here with price coming up into not just overbought, but then extreme overbought. The levels that I'm using for that are 70 for overbought and 80 for extreme overbought. Overbought is the line that you can see here on the RSI, all right? And this very small dotted line here is extreme overbought. So whenever price is interacting with those levels, especially on the 4 hour, if we then decant that down here onto the hourly, that's where we get interested. Now, the way I like to trade these levels is I'm waiting for the liquidity to be taken, all right? And then I want to see price come down and close below. So as we can see here, price comes up, takes the liquidity above. It's closed above our liquidity level, which is the high here. So we're saying to ourselves, when price gets here, we've got one of two options, yeah? We're saying price either comes up, sets this high, comes back down, tests that high, and I do like to see a retest of this high, or for it to come back in the vicinity to show that it's broken the high that it's set. It's come back down, found support. Then as it's broken out above, you often get this move back down and then a more powerful impulse move higher. Obviously, we didn't get that here. As soon as prices then come back down and closed in the range, the area I'm interested in here is this, right? It's the low that led to the break of the high, all right, that led to the liquidity grab. We come down, we start closing below this, then I'm looking to take entries around here on a lower time frame. So let's take a look at the 15-minute here. I'll show you what that looks like. Okay, and what we're saying to ourselves is this is the low, price has come up here. If this is the deviation, price has closed back in the range, yeah? So what gives us extra confidence in that is then when price closes under this level. When that happens, I'm looking to get some orders in on this line here, all right? And then stops above the swing. So what we can see here is we'd have our stop losses up here, short trade. Once we broke and closed down here, our orders go on this line. That gets triggered. Stop loss up here, quite a wide stop on this one, right? So we'd always be aware of that in terms of our risk positioning, right? If we've got a particularly tight R to R, risk to reward on the trade, as is with this one, because the main target for me, the first target, is going to be here, okay? These lows. This is where we expect liquidity to be sat. So we go down here and we want to be a little bit conservative. We want to make sure before we get there, just in case we get front run, that we've got at least a 1-to-1 R. And obviously we want a little bit more than that. You know, our key target would be this area here. We've got a 1.27. Obviously with extended targets, we would look for price to be filling in this inefficiency here, this very thin move, and then ultimately start taking out the lows below. All right, so about here. And again, I'd probably be moving this up a little bit to somewhere around here, just in case, again, price gets front run. What we can see here is price came in. We took out these lows here, right? So let's just draw a line across there so we can see that. We've taken out those lows that we can see here, and then price has reversed back to the upside. And in a very, very similar principle, if we're looking here for the move to the upside, price first comes down, okay, stops here, closes under, comes back up, all right, then comes back down again, closes below here. So what we'd be saying to ourselves here, depending on the time frame that you want to trade, this is a load of different ways you can trigger it. I like using the lower time frames, just gives you a little bit more granularity and also allows you to get slightly tighter entrance, all right? So if you're doing this on the higher time frames, then you're going to be looking at this high here, all right? So as price comes down, this is the high that leads to the break as it goes back above. On the lower time frames, like this one on the 15-minute, as long as price closes back under the level, that then becomes the high, all right? Price closes under, comes back above, sets this high here. We've got our limit orders placed on here. We can see price chops around a bit before it makes a nice move to the upside. So the key is understanding or looking at where we believe price is going to go. And in my opinion, then the markets are looking for liquidity, all right? That's why you see the runs of these highs, see the runs of these lows, all right? And as we can see here, price now is starting to find a little bit of momentum and try and move to the upside. So if we zoom out again, let me just clean this up. I'm going to bring in our inside bar pattern here. Now, what we can see here on a weekly scale is, as we just discussed, this is our mother bar. Here's the mother bar high and the low. That forms our larger range. Here's the inside bar high and low, which forms our smaller inner range. Okay, so as soon as that candle closed, that's when this comes into play. We're waiting for one of the highs or lows to be run, price to close back within, and then go to the far side. Or if price closes underneath, starts to break down, then we're looking for lower targets, starting with the mother bar low. Now, the other thing that you'll notice from streams and posts and bits and pieces I put out is looking at the prior week's high and low, which I trade a lot. This here, the inside bar high and inside bar low, also happen to be the prior week's high and the prior week's low. All right, so we can change these. Okay, for last week's high and last week's low. Then we're looking at this as we would do any range. So let's take a look at the hourly and see where our high probability trade setups are. So if we see price in a range, yeah, and let's just say this has been pinging around in this range here, we've had here to here, now we've deviated the highs, our expectation is for price to come down and test the lows. Now, if it doesn't do that, then something that I look at here is if the bearish momentum isn't enough to push price down into these lows down here, yeah? So if we get a continuation of this down, price deviates, yeah, and closes back within, then we can start expecting some higher prices. However, what we can see here is these lows have been run, all right, and these lows have now been run as well. So any liquidity underneath these lows has now been taken, yeah? So they're the stop losses of people that have gone long here, which for those of you that don't know, a stop loss when you're using it, if you're in a long trade and you place a stop loss, that becomes a sell order. Same as here. Now, if price wants to push higher, yeah, you can often see price coming into these levels, taking the liquidity, all right, because they're creating down here, yeah, they're creating the liquidity they need to move higher. However, if, like in this situation here, we've got the clear high, price fails to get above this high, then we expect to break down further, okay? However, if price comes up, takes this high, yeah, and then comes back down and then looks to break this high and move higher, well, then we know that price is almost certainly coming back in to test this level. Now, this is a little bit tight here, all right? Even for a scalp trade, our risk to reward just really wouldn't be good enough. So what we would say to ourselves is, okay, if we do get that scenario, price comes, breaks above, takes out this high, retests it, comes above this high and does something similar, then from there, I think we're looking at a high probability trade setup into here, the mother bar high, but also being aware of those highs. That looks terrible, doesn't it? Let me do that properly. Right? Also being aware of these highs up here. All right. So if we get and start to hold above here, we've got a bit of confluence from our RSI, then I think we start to push higher. Now, what happens if we start to break down? Again, from here, for me, when we look at the lows that have been taken here and here, we start to push down lower, all right? Then there seems to be no point at the moment. It seems to be too high risk. If we're talking about price coming down, it takes out these lows, right? Prior lows that it's set here. We need to be aware of these lows down here, which are obviously on here. So what we'd be looking for, or what I'd be looking for, is for price to come down here. Yeah? Maybe chop around a little bit, come back here. Now, when price comes back above here, if it does something like this, all right, if it comes down, takes the lows, we find the high that leads to the break of those lows. If we come and close back above that, the chances are that we've got some bullish momentum on our hands, all right? So if we then get that backed up by the RSI, so for example, we can see here the RSI starting to push up a bit. You know, maybe we get the RSI do something like this, pushes up, drops back down. If we get that drop back under, yeah, back under here, which is oversold, and then price starts to push up here, this is where we've got our confluence. We've then got a really nice clear target, all right? And we know where our stop loss needs to be because it needs to be under here. So we're saying we get the run. We're saying liquidity's been taken. It's now come back up. It's showing us the strength that we want to see to push higher. So we would set up a trade here. This would be our first target. We'd then be playing into these highs. And if it keeps going higher, we're just taking it level to level. Okay? So let me show you something else as well, guys. Something else I wanted to cover to you today, obviously looking at the RSI, and we got a quick question here from Andres. So thank you. Can you share the name of the RSI you're using? Yes, certainly, buddy. This is one that I've had a mess about with myself, but the very fine gentleman that created this is a chap called Fikira, Fikira. Creates some amazing stuff. He's very, very kind to give this to me and let me have a little mess around with the code with it. Now, the only thing I would say is that this is coded up to pick up a lot of stuff, right? So you're talking about bearish divergence, bullish divergence, hidden bearish, hidden bullish. Now, it will pick up even the most minor, even the most minor of divergences. So we see like we've got here and here, for example, and neither of these played out. All right, we can see that we've got a similar situation here with this bearish divergence, hidden bearish divergence here, which led to the tiniest of pullbacks. What I use I've got used to using this over the years, to be honest. I've not changed it. But what I use for divergences is I use the B Pro, all right, the Burbicator Pro, because this works it out across a lot of different instruments, not just the RSI, and it also gives you a percentage that's attached as well. Now, for me, the key way that I'm piecing this together is I'm piecing it away by price action first. Like we said, we got the high, we've got the low. We knew when we were coming up into this area here, that we wanted to be looking for shorts if we break back down into the range. All right. So we're first checking our 4 hour. All right. As we do here, as we saw when we came up here and took out these highs. So these were the highs that we had here. Price came up, took out these highs. We got our bearish divergence. We had an RSI that's up in overbought. Price broke down, closed underneath. We then moved to our lower time frames to execute. And then we're looking to trade down lower. Now, in terms of target setting, when we've got a clear range like this, we've got this high, we've got this low. When we're looking at targets, something to remember as well, what I like to do is when I've got two clear levels, a high and a low, this is just a simple Fibonacci, all right? And all I've done here, and let me just close them off. All I've done here is I've just added a 1, a 0.75, a 0.5, 0.25, and a 0, right? And this, for me, immediately breaks it down into a range. But this here is the key level that we're interested in, which is the 0.5, all right? And that becomes our range midline. Now, let me get rid of the fib. And that's from the mother bar high to the mother bar low. Yeah, that's our weekly high to our weekly high, to our weekly low. Now, this is our midline. So when we broke down here, we got into this trade on the lower time frames, we got a nice entry, price moves down, we can set ourselves an interim target here. If we don't start breaking and closing below here, the EQ or the midline of the range, yeah, bearing in mind this is just as we set this last week's low and last week's high, right? So at the time this happened, we didn't have this information. So we've got our EQ, and see how this stacks up like a range. Price pushes up to the highs. We come back underneath. We've run these highs here, if we remember rightly. We're playing the breakdown. We've got the high, got the low. We've now got our midline. We can see how price has pushed into that nicely before reversing. When we see that price isn't or doesn't seem comfortable pushing down any lower, which we can drop to our hourly time frame for, we can see it breaks down under here. We get our bullish divergence here. RSI is approaching oversold, right? So then we can say to ourselves, okay, if we start closing above the high, that broke the low, exactly as we do with our entries, then we can start to scale out. If price reverses, yeah, people say this a lot, but you know what, if you get out of the trade or what if you close too early, no problem. I like booking profits. I like taking profits, and then if the trade runs up, I've got my stops at entry, fine. If I got taken out here, then price reverses back down, I've already made my money in this part of the move, right? So I don't need to be greedy here. But what I do know is these lows here, if price is going to push lower and start closing and starts taking out these lows, so we get something like this, for example, we take out those lows, right? And then we start closing below there, then we've got a nice trigger, right? And then we can say to ourselves, well, let's look left across the chart. What have we got here? This area here is just a big inefficiency, right? This fast move up. So does price come down here to fill this gap? Yeah, target 1. And then if it continues down, we've got our second target here. All right, guys? So we're just waiting for price to tell us what it's going to do. We're not going to be right all of the time. All we're looking to do here is give ourselves a set of parameters that means that we can take the more high probability trade setups. So if we taken this, if we hadn't taken our profit, or if we had got stopped out here, we see price starting to break down, FOMO in around about here somewhere, which is what a lot of people would do. Price rejects here, comes back up to take those stops and can easily continue its journey down, or it can take out those stops and continue its journey up. You know, I think we really, really always need to remember here to have our high time frame bias intact, right? So when we're looking here, let's not get caught up too much on the lower time frames. Let's make sure we're watching the higher time frames as well to say to ourselves, all right, well, on a daily scale, how's this looking? Well, it's not looking bad, is it? It's not looking bad. What have we got? High, higher high, higher low, higher high, higher low, higher high, higher low. At the moment, this is being treated as a lower high, which it is. We've come into there, but price holds this higher low. There is nothing to stop this just pushing up, breaking those highs, right? And moving up. And again, we've got a trade plan if that happens. If price moves up here, yeah, right? We get this move up, right? Then what we want to see is a close above here, right? And then we can get our entries in here on the pullback. We just need to wait for confirmation. The problem is we all too often get a fast move up, people start entering here, only to see price come back down, close within the range and go lower, taking out their stops, adding a lot of liquidity, right, to a downside move. And then we could see the same down here, right? So for me, it's always important to understand where our levels are. Once we've got those, we can then plan our trades around there. We always want to go in. We don't want to hold a bias for any sake or any reason. We want the bias to have a purpose, and we don't want to hold on to that bias. If the market conditions are telling us that it's getting bearish, apologies, I'm just pouring my tea, very British. If market conditions are telling us it's getting bearish and we thought it was going to be bullish, well, then we flip our bias to bearish as long as we've got confirmation. Rajesh, thank you very much, mate. Good day to you too. So this is what we're looking at on the high time frames, right? Let's not forget we're in a nice bullish structure still until we start breaking down from this, which we can see we haven't done here. And let's look how lovely we've supported this. Come in here, support, support, support. Now, when we throw in our diagonal here, we've got a little bit of something else to go by, haven't we? So if now we're thinking that we're going to break down, well, we've got a second or an extra point of confluence, right? So let's pop this back on the, let's pop this on the 4 hour. Pop this on the 4 hour quickly and say to ourselves, right, look, support, support, support here. We've got our midline. Now, remember what we were saying before. We're saying if price is going to break down here, we'd want to see these lows taken out, yeah? So now we've got those lows in mind. We've also got the channel EQ. We're saying if price doesn't have the bullish momentum to come up here, start messing with this, it may well do something like this, come and take a bit of liquidity here, yeah, before then making a run lower. But we don't know that. We don't know what price is going to do. All we can do is be prepared for both eventualities. We've got a high there and we've got a low down here. What I like about the low setup here, if we're going to be looking for a breakdown, is we've got a really, really clear plan now. We've got this lovely intersection here, right, where prices come in. And all we say to ourselves is, right, if price doesn't have the momentum to get up here, right, it starts coming down to here. If we lose this, yeah, and then we lose that level, then we're saying to ourselves, right, we've lost this, right? We've closed below this low, taking that out. We've also run these lows. A pullback into this level, yeah? And we can look for short trades with a high probability set up down to here, all right? Now, if the opposite happens, we could see something like this. We could see price come back down and retest this, also starting to make a bullish structure, right? Then we're saying if we start getting and flirting with these levels up here, of course we're going to be aware because we could be running the stops up here before then a nuke to the downside or before a pullback. But once again, we're still in a high time frame bullish structure. So until we start breaking down, yes, we've set this lower high, right? But as long as price pushes up beyond that and this high, then we still retain the bullish structure. If, however, we start to break down below these lows, then we can take the high probability setups to the downside, okay? So let's always be looking and reminding ourselves, first of all, what's happening on the high time frame? What's my high time frame bias? Here we are, nice and bullish, meaning that any reversal trades we're taking, until proved otherwise, are corrective moves. Yeah, they're corrections in an ongoing uptrend on a daily scale. But remembering our high time frame bias, right, which is that until we start coming up on a weekly scale to take out these highs, then overall we are still in a very bearish structure, okay? Lower lows, lower highs, lower low. Yeah, we first want to target these highs and then we start looking to target these highs, all right? But that's a long way off. There's no point getting too caught up in that at the moment. The other thing that I want to chat about quickly with you guys before I let you go today is using Monday's range. So what else do I bring into the charts? Let me just clean this up quickly. I hope this is making sense as well, guys. If you've got any questions, please don't hesitate to pop them in the chat on here, or you can come and grab me at the Nest, and I can always go through it in a bit more detail with you, all right? So here we go again. We're nice and clean now, right? The other thing I like doing that I find important is looking at Monday's range, okay? So first of all, we want to bring in the weekly open. Okay, which we can see here, which is pretty much exactly where price is at the moment. And then the other thing I'm going to bring in here is Monday's range, all right? So that's just simply Monday's high and Monday's low, which we can see here on the daily candle, all right? So we've got our weekly open here, Monday's high, Monday's low. Now, we can see here when we had the weekly open, price has really pushed up off of that. Then it failed, it set this higher, and then the following day, the Tuesday, we see price come down here. Let me zoom in for you a little bit. Now, what we see here is price come down and take out the lows of Monday's lows, all right? As price takes this out, what we're expecting is a move back in. If we close back inside the range, then we want to see more momentum, right? So, price comes up, closes here. Price then comes down, all right? And we see it take out the lows here. So let's look at this now on an hourly time frame. It gives us an idea of how the price action played out. So, we can see as prices come down, comes down, takes out the lows here. And then we get rejected here at the EQ. Remember, this is our midline from our weekly levels. So what is worth noting here is as prices come down, it's taken out these lows. Yeah, we've also taken out these lows. And we've also taken out these lows. All right. Now, that's all adding liquidity for a move to the upside. So now we have a really, really clear trade plan, right? We've got the weekly open here, and we've got Monday's range low. If price comes up here, right, and we get a break back into here, what we want to see is price break the high, right? So we want to see the high that breaks back into the range, yeah? We want to see that, then we want to see that, right, that high broken, yeah? A retest of that level then gives us a really nice opportunity for a trigger higher. That is the worst arrow in the world. Let me draw that. Right. So then that gives us the trigger for a move higher, right? So on the contrary, what else could we look for? Because look, remember, this is our liquidity level and it's the weekly open, right? Price has come and broken below this. However, it's now broken above it, right? So what we're saying is, if we've got a break above this, we want to mark that level out. And this is the level that we're looking for. If price has then got the strength to reclaim the weekly open, get back in Monday's range, come back and retest this, right? Then I would feel fairly confident entering some orders here. Now, we've got a fairly wide stop here, right? Is the only problem. Because realistically, you know, we're going to be targeting these highs first, and then we're going to be looking to the highs of Monday's range. So if we're playing this on the pullback to here, and our stops are below this low, then yeah, okay, we get to a 1R by here. I'd like that trade. I think that trade's fine. We're looking at a 1.7 roughly then to the range highs, which I think's ideal. I'd probably play it with like half a position size, all right, just because we've got it quite tight here. And now the other thing to say is obviously we don't want to get attached to our bias. What happens here? Well, the great thing is if we've set this high back in the range, if price then doesn't have the bullish momentum to reclaim that, or if it does, but we start pulling back, it gets close and starts pulling back here, then what we're saying is, well, if price rejects here, and let's remember we've got this low down here, right? This is also our EQ from our weekly levels. Remember, when we're adding for Confluence and stuff here, guys, we're looking to tell a story. Matt, thank you very much for the feedback, buddy. You're more than welcome. So when we look here, we've got the confluence of these lows. We know these lows have already been taken. We want to be aware of these, right? We want to be aware of those. But an ideal scenario here would be for these lows to be taken. If price breaks down, fails to get back in the range, we've got our lows here. If we can get price to take down here, take out these, and then if we get the reaction here, we can then look to trade this to the downside, right? Because what we're saying to ourselves, and we can also pop on our oscillators here as well, what you'd want to see here on your RSI, ideally, is a little push up here. Yeah, in an ideal world, you'd want to go here into overbought. But even if it falls a little bit short, if we start seeing it making lower lows and lower highs and starting to show weakness, it gives us a little bit of confidence to trade this then to the downside. Okay, so we've got our two trade ideas. We've got it on the higher time frame. We've now got it on the lower time frame. So what we're watching is we're watching this level here from Monday's range for a break above, and then we'd be targeting the highs via these highs here. All right. Then if we break down below this level, we want to see the liquidity taken here. Then if we see price hold, comes down, takes the liquidity, comes back up into this level, maybe chops around a little bit. But then when we see the bearish market structure form on the lower time frames, right, we know if we've got this level, we can play the pullback into it. And then we always want to be looking left on the charts, guys. All right. Where would we be targeting? Well, I'd be looking for this kind of area first, all right, which would be target 1. And then we'd be looking to run these lows down here, probably just short of them in case we get front run. But then we've got target 2. A really nice, good risk to reward trade with a high probability setup. Let's not forget the weekly open as well, guys. Price does have a tendency to snap back to this. If it rejects from here and follows our plan to the downside, I think we've got a good chance of coming down here, especially finning in this inefficiency here. But do be aware of these lows if we start to crack down lower. All right, guys, price does love to grab liquidity before reversing back to the upside. So one more thing to cover off with you guys just before I leave you for the day. If you've got any questions, as I said, please don't hesitate to pop them in the chat or come and grab me in the nest later. Let's just have a very quick look at the dollar. So what we're seeing here on the dollar is we've come up, run these highs. All right, and let me just give you some context for these. Context from a long time ago, all right? But from these highs back here, where we set that, liquidity got run and it dropped off. So we're now looking around here for a reaction. Price has come up. Obviously, the dollar has been super bullish. So we use the DXY to monitor that. It's more of an idea around how risk is performing in the market, or certainly what the appetite for risk is in the market. Okay, so we're using this as counter Confluence, or for countering Bitcoin. This is going to do the opposite of what Bitcoin's going to do. Typically, right? If there's strength in the dollar, it's normally weakness in Bitcoin, right? So what we can see here on a daily scale is we can see this starting to pull back a bit. We've got all this stacked divergence here on the RSI. If we pop on our B Pro, we can see how perfectly it caught the top here. All right. So is this just a corrective move? Are we going to come back down to these levels, maintain the structure and push higher? We don't know. All right. We just don't know. All we can do is trade what's in front of us. And on a daily scale, this is still bullish, right? But with such an overextended RSI and bearish divergence on the B Pro, we should be looking for some kind of pullback here, in my opinion. However, markets don't do what I say. They don't do what anybody says. What's interesting here is as price moves up, we've got these highs. We've come back down, taken out these lows, led to taking out these highs. Yeah. So as we were talking about in terms of liquidity, right? Prices run these highs and sold off in the same way that price came down and ran the lows here, ran the lows, came back in, run the highs, now coming back down in towards these lows. So what do we want to be conscious of here? Conscious of these lows. So we could see a little pump in Bitcoin as price on the DXY starts to pull back. But something I'm going to be very cautious of is this, because if price comes back and then starts to move higher, then we're probably looking at bad news for risk. All right. But again, it could play into our shorter time frame trade plan when we're looking at Bitcoin. We're only looking for Bitcoin to travel a little bit across the range, get up marginally in order to hit our long position, which would be, remember, we're not in that long position, guys. We're saying if price comes back and closes in the range, takes out the high, that swept the low, then we can look for our long setups. If we have that, that could coincide quite nicely with price on here pulling back into here. If we get a deeper pullback, then there's no reason to think that Bitcoin and alts can't go a bit higher. All right, guys. So do watch that. And obviously for a correlated asset to Bitcoin, again, nothing's 100%, guys. So please do make sure you check these things out for yourself. This is just what I do personally. Then we're looking here at ES. We can see on a 4-hour scale, we've got this downtrend starting. We had the high, low, lower high. We've now broken those lows. All right. So we're looking towards these swing lows down here. If ES starts showing some strength, we might be able to see some strength pushing up back in towards Bitcoin as well. However, I think we're seeing a bit of indecision at the moment around the CPI data. Okay. So that's out today. When that gets released, markets are always a little bit nervous, or they're always trying to, push a little bit towards it, trying to front run it or trying to get themselves positioned. Now, you'll hear the term priced in quite a lot. Okay, so it depends what's the market priced in for that. We don't know, right? But the markets have been, in my opinion, overly bullish when the information coming out of the Fed hasn't actually been that dovish, okay? But it's been seen that way. We've also got some good earnings reports coming out in the market, all right? Some companies that expected not to make earnings that have, all right? But inflation data is really, really high, guys. And, CPI today... thank you very much, Partial Daily. Really appreciate that. And Rajesh, quick question here from Rajesh. What's your prediction? Yeah, CPI announcement. Well done, bud. Yeah, exactly. So CPI, it's very difficult to know what the market's got priced in at this point. The reactions have been lessening and lessening. So one would think that the information or the markets are pricing in a worst case scenario than what people think. However, I do think if it comes in above, then we could see a little bit of a blitz on risk assets. Risk assets have been pumping quite hard. We've had this little pullback now, but in the same vein, if we just flick it, or we can even use this using the S&P 500 here, or the ES, which is the mini futures, this pullback that we've had here, still not taking out these lows, right? So for me, I think this is still a fairly healthy corrective move because we've got the low, high, higher low, higher high. Now we're just coming down. We could just be forming a higher low before price moves up to take out these highs. So as we can see with this, as we can see on Bitcoin, the drop wasn't as aggressive as I thought it would be. And to be honest, I was waiting for it from slightly higher up. So for me personally, when we started to get this pullback, I was looking here. I think this pullback here came mainly from these highs. Price came in, swept these highs, and then corrected back down. But we can see a positive reaction from the EQ or the midline here. I do think if we can get back in Monday's range, CPI data is better than people think it's going to be, or at least it's on parity with what expectations are, we could then see that move up. And what that allows us to do is take some profits off here, move our stops to entry, and leave a nice chunk of the position running if we should move higher, because that's going to be heavily affected by that CPI data. So do be careful today, guys. If you've got positions open, have one eye on CPI. If you're looking to take positions, please do it cautiously. All right. So look, I'm going to let you guys go. We're hitting this just under the 45-minute mark, which is decent. Try and get them down a little bit from that in the future. I hope this has been helpful, guys. I am going to be live with these every week now. I think we're going to focus them on a Wednesday. So if you've got any ideas, come and pop along to the nest, or if there's anything you'd like to see, if there's any chart requests you'd like, we'll make some time for those towards the end of the streams as well. And any more information, all of my stuff, my streams are available through the nest. So do come and check us out on there. We've just got a wonderful new partnership as well with BitGet, and we're going to be running a quality trading competition that's exclusive for Nest members. 10,000 USDT on offer, so come along and try it yourself against the team. Thanks so much for tuning in. Rajesh, Partial, Matt, Andrus, everybody for your comments, everybody else that tuned in today, and everybody that watches this on recording. Thank you very much. I'll see you guys next week. And like I say, if you've got any questions, do come and catch me around the nest. Have a great week, and remember about CPI later today.